This is the Southside School of Financial Freedom Watch List and Market Report for the week ending October 9th, 2021. Our question this week is, what is risk on, risk off? The answer will be provided later in the video. This week, the market ended higher. The Dow Jones Industrial Average decreased minus 0.03% on Friday, but was up 1.22% for the week. The S&P 500 decreased minus 0.19% on Friday, but was up 0.79% for the week. The Nasdaq decreased minus 0.51% on Friday, but was up 0.09% for the week. Looking at the week, we can see that there were 9 up finishes versus 6 down finishes for the major indexes. On Monday and Friday, all 3 major indexes finished down. On Tuesday, Wednesday, and Thursday, they all finished up. The new unemployment claims were 326,000 versus 345,000 expected. Non-farm payrolls increased by 194,000 versus 500,000 expected. The U.S. trade deficit jumped to a record high in August. The average contract interest rate for a 30-year fixed-rate mortgage increased to 3.14%, while refinance demand fell 10%. The 10-year yield, Treasury yield, rose above 1.57%. Bitcoin pierced $55,000, and the Senate passed a short-term increase to the debt ceiling. New unemployment claims, the monthly number of non-farm payrolls, the U.S. trade deficit, the 30-year mortgage rate and refinance demand, the 10-year Treasury yield, Bitcoin surpassing 55,000, and the Senate passing a short-term increase to the debt ceiling are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is risk on, risk off? Risk on, risk off, or RORO, is a market sentiment that describes how the stock market is expected to react to economic and financial events, and it is guided by changes in stock market participants' appetite for risk or their risk tolerance. Risk on is an investment term that describes positive market sentiment. Investors buy riskier, higher yielding investments like stocks, especially growth and technology stocks. The market is generally in an upswing and predicted to go higher. Traders and investors are more likely to buy stocks on margin. That is, they're likely to borrow money to buy stocks. The Nasdaq, which trades a lot of technology stocks, is likely to rise. Conversely, risk off is an investment term that describes a negative outlook for the market. Investors are pessimistic about the market and the economy. They expect that riskier investments like stocks will decline in value. Investors generally turn to safer but lower yielding assets like gold and other metals and treasury bonds. Do you know if we are in a risk on or risk off market environment? Do you buy stocks when it is risk on? Do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. you are going to have to teach yourself if you ever want to learn how to get wealth and income through the stock market. You must RSI, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor. And they taught you nothing about the U.S. financial system. You can learn how to be an investor if you simply start reading books about investing. Books that you can borrow from the library or buy cheaply online. It is not difficult to learn how to be a passive investor, which is how most people should start. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschoolofinancialfreedom.com. Here is my trading watch list from the week ending October 9th, 2021. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week and for the second week in a row was Grayscale Bitcoin Trust, ticker symbol GBTC. It's in the second column. It increased 13.85% for the week, and it was up 1.9% on Friday. Grayscale is an investment vehicle, somewhat like an ETF, that enables investors to gain access and exposure to the price movement of Bitcoin without buying, storing, or safekeeping Bitcoin directly. Looking at a summary of results, you can see that Grayscale has increased just over 32% year to date. I own Grayscale shares. I do not generate cash flow from it because Grayscale does not have option contracts. I use options to generate cash flow from stocks. I use Grayscale as an indirect investment in Bitcoin. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 Index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio is not outperforming the S&P 500 Index ETF SPY. The Southside portfolio is up 4.57% versus 17.11% up for SPY, a difference of 12.54%. The Southside is losing to SPY by just over 12.5%. The primary reason the portfolio is losing is that the Southside is heavily invested in Bitcoin, and Bitcoin took a big hit this year. Bitcoin has, however, outperformed the market for the past 2 weeks. Will the comeback continue? We'll see. The portfolio is 74.9% in a Bitcoin trust. Equities, including puts, calls, and ETFs, make up 24.55% of the portfolio. Cash is 0.55%. The cash flow generated for this week was 0.85% of the portfolio account value. The account value changed by 9.44%. Meanwhile, the S&P 500 ETF SPY changed by 0.83%. I sold option contracts on 2 positions this week. They were 2 calls that ranged from $453.39 to $503.39. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschoolofinancialfreedom.com. Check out past videos for other questions of the week. They are listed in the description section. Please like, share, and subscribe.